Hello, and welcome. Welcome once again to the Secrets of the High Demand Coach. And I am here with yet another high demand coach, once again in a slightly different take on that word that you're going to understand here very quickly, but someone who has some extraordinarily valuable information for each and every one of you here today. It is the one and only Matthew Sercely, who graduated from the University of Dallas and attended Ave Maria School of Law and SMU School of Law. He received his law license in 2009 and spent much of his early career working on personal injury cases. Now he provides tax and advice planning to small business people and real estate investors. He's an attorney and a tax advisor who helps business owners legally take advantage of the tax code to reduce their taxes as much as possible. Well, Matthew, welcome to the show. First question right out of the gate here. As I was looking at your website, you got a big, bold statement that most business owners are paying too much on their taxes. I think it just says you are overpaying your taxes. So back that up for us a little bit. Why is that, particularly in the world of founders? Why do we have a tendency to overpay on our taxes?
There's a couple of different reasons. One of them is my observation is that most successful businesses focus a lot more on going out and making a profit than dotting every I and crossing every T at the beginning, which means they didn't do any tax planning. And that's a smart thing to do, I think. But then they maybe don't go back and fix it. The other thing is that the tax code is incredibly complicated, and a lot of people, they just put their head in the sand and it's like, well, I'll just make more money and pay the taxes, and I'll trust my CPA to tell me what to do. And not knowing, most CPAs are not doing tax planning. They're not going to tell you how to avoid taxes. They're just going to say, okay, you did this, you owe this. Next.
Yeah. So I want to address, because there's a couple of things in there, but I want to kind of do a Mythbuster style. We do this every once in a while on the show when we get an area that has a lot of myths that surround it. And so the first one I want to hit is actually, I think, a really, really common one, but it happens to many of the most successful businesses for exactly the reason that you said before. Most of the time, you become successful by focusing on generating a profit, right? If you don't do that in the first place, it's hard to have a successful business. And you don't always want to, no one starts their business to save taxes. Well, that's not true, but most of us don't, right? There's some unique strategies on how you would do that. But for most founders, they started to do something else, to make a profit, to achieve freedom and autonomy, et cetera, et cetera. When is the right time to really focus on your tax strategy? And when would you actually choose to maybe even have less profit during the year as a result of a tax strategy?
So there's a couple of different times when you should look for tax strategy. One is if you are paying the bills full time with your job, it's actually past time you should have looked at it. Secondarily, if you've got some sort of a side hustle, I would do it really as soon as you're truly profitable. Once you've made $10,000, $15,000, that's the time to do it. Because if you've got income from a job and then a business, it's really easy to mess that up compared to just having a company. My third rule of thumb is anytime you got more than $75,000 in profits, again, it's probably past time to look at it. You, depending on your circumstances, you can start saving money even after paying someone like me at $40,000 or $50,000 in profits.
Wow. All right. So then a couple of myths. The first one's very related to this, and that is a lot of founders will go in, they'll work all year to make as much profit as they possibly can. December 31st comes and goes. January hits, maybe a couple more months hit before we really start paying attention to taxes. March, corporate due date, or April, personal due date come in, and they go to the tax guy fix it, right? I have this giant bill. So can you fix it? And if so, how do you do that? If not, what should we have done?
So there's almost nothing that can be done after December 31st. Once December 31st comes and goes, the books are closed, and there's very little we can do. You need to be planning the whole year. Realistically, with a lot of my clients, I do their taxes in April. Even if we do an extension, I do a draft of it. Then usually starting May, June, July, we start, okay, let's look at this next year. What are we going to do? Now, there are a few things you can do at the end of the year. There's the kind of things everybody knows about, IRA or HSA contributions. But the bigger one is if you've got any sort of a solo 401k or 401k, you can actually do that in some cases as late as September of the next year. So that's going to be the best way to really move the needle once the books have closed for the year. The other thing you can do is you don't have to classify things until you file your taxes. So, if you buy new equipment, should you expense that or should you depreciate it, assuming you have the option? You get to make that decision after, when you file your taxes. That's basically, though, all you can do. Like 98% of what you owe is set, the end of December 31st. And that's another reason, like, not only am I planning the whole year, I always have an end of year meeting, ideally last week of November, first 2 weeks of December with my clients, just to go over, okay, like, is there anything we want to do to move the needle while we still have a choice of when to do it?
So there's very little we can do after December 31st. What are a couple of things that you can do before December 31st that you do with your clients?
So the very first thing we should be looking at is, are you set up in the right structure? Are you a corporation? Are you an LLC? Are you taxed as a partnership or sole proprietorship, an S Corp or a C Corp? That's going to be 60 to 70% of your tax savings or overpayment in taxes. The next thing I like to look at is, can we take money you're currently spending and turn it into a business expense? And like, there's small things that everybody does, your cell phone, maybe some of your home internet, even the home office. But there's a lot more you can do that you can take and make something you want to spend money on for yourself into a business expense. One of my favorite strategies recently is, if you want to buy a firearm, and I don't know, we're used down on owning guns, but a lot of people like owning guns. Well, almost any business can justify spending money on protection and defense of the business. And so, you're not going to be able to go out and buy 17 guns in a year, but if you want to buy one gun every 2 to 3 years and go to the range maybe 3 or 4 times a year and pay for that as a business expense, that is justifiable for almost every business. I love those. My big thing is, what are you already doing? And let's turn it into a business expense if we can. Because I never want, I hate the tax advice like, oh, you want to save money on taxes, go buy a car. Well, if you don't need a car, you're wasting money doing that. You just spent, $70,000 to save maybe $20,000. But I'm sorry, that's not smart. But if we take money you're going to spend anyway, and we can move it from the after tax to the before tax, that's where we can really get some savings.
Yeah, you got one of my other myths, which was that end of the year, the car. It's always the car. I don't know, or the truck, right? A lot of families, the truck, and it's a big one. So next one here is, isn't avoiding paying taxes illegal?
No, absolutely not. There is a difference between evading and avoiding. And in fact, there's a federal court case where basically the IRS was suing somebody and said, hey, he structured his business, and because of how he structured it, he owes like half as much in taxes. And the way the judge ruled was, well, he structured his business legally. Because of how he structured it, he owes this much in taxes. Not only does he owe the legal amount, it is actually his duty as a patriotic American not to overpay his taxes. Wow. Now, there are some warnings about fraudulent tax avoidance, which is basically you're committing fraud to avoid taxes, which is slightly different than evading taxes. Don't do that. But no, there are many, many ways to legally avoid taxes. And again, it can be as simple as, stop being a sole proprietorship, go to being an S Corp, and you are, if you do it right, going to significantly lower your self-employment taxes. Totally legal, 100% legal avoidance of taxes. Evasion is when you owe the money and you don't pay it. That's when you get in trouble. But if you do it right, you never owe the money in the first place, totally fine.
Yeah, so good. So another one here. Don't most tax avoidance strategies only work for the super rich?
There are some tax savings and tax avoidance strategies that really do work much better for the kind of the trust fund crowd. Because there are certain tax savings things that there's a very good chance you're going to lose money on them, but if you can do them 50 times on that, you'll make money. But no, there are many, many, many things. And in fact, there are some, it's a little easier sometimes for smaller people. I call it the tax avoidance donuts. If you're making less than $200,000 a year, and these are net profits, if you're making less than $200,000 a year, there's a lot you can do to save money on taxes. If you're making more than about $500,000 a year, there's a lot you can do to save on taxes. That 200 to 500, there are things you can do, but there's fewer things you can do compared to the smaller or the bigger groups.
And you've mentioned this a couple of times. There's different ways of setting up your business, and one of the things I've heard is you should never use a C corp because you're always going to be double taxed, right? So it's always double tax, double tax. Is there ever a time when the C corp would result in a lower net taxation?
Yeah, there's actually several times when it makes sense to have a C corp. Sometimes the proper way to set up your business, and if you do this, please work with someone. Don't just do this on your own, especially these things. But it can make sense to actually set up your company as two separate businesses. One, an S corp, and one a C corp. And that's because a C corp can pay for certain benefits for you and write them off as the owner that an S corp can't. A second thing is, if you're starting up a business and you're basically planning on putting most or all the money back into the business for a couple of years, a C corp can actually result in much, much lower taxes. Because the problem with the C corp is when you take the money out and put it in your pocket. If you never take the money out, or you don't for several years, you avoid that double taxation. And in fact, C corps only get taxed 21% on their profits compared to the vast majority of people these days, 22, 24%. In 2 years scheduled to go to 25 or 28%, and C corps are still going to be that 21%. The third reason to be a C corp is if you are planning on building a business that you want to eventually sell, and sell, like go public with it, because only C corps can go public, and you can take an S corp and turn it into a C corp generally, but there are problems doing that. There are expenses doing that. So if or if you're going to be raising venture capital or anything like that, you basically have to be a C corp. You don't save taxes at that point. In fact, you may pay more in taxes, but it's your only option, so you have to do it. But so no, there are absolutely reasons to be a C corp. There's absolutely reasons there are benefits to every type of way you can be taxed. The C corp, it's usually not the right choice for most people, but it definitely has its place.
So you mentioned this before, right at the beginning of this question, actually, and saying, hey, don't do this alone, right? The tax code is complicated. Corporate law is complicated, and there's lots of places that you can get this very, very wrong. But one of the challenges that I've found with founders in particular is that they go to get help, and it's like you go and you walk into another country, right? They speak a different language. They have different priorities. It's like you say one thing, they say something, what seems like entirely different back. Like there's just this gap between founders and many professional service providers. What can founders do to overcome that gap to get the best advice and help they need?
Well, so there's a couple of different things they can do. If they're big enough and they have legal counsel as part of their team already, they could use them as kind of a go-between, an interpreter. And hopefully, if you already have legal counsel, they're able to translate, legalese into human. I much prefer the way I try to do it. I try to be a human being and not just a lawyer. I will use technical terms so that my clients use them, but then I'll define them for them. Another thing, and this is, I think, something that every business owner should do. Investopedia does like a daily email where they send out a financial term every day. And a lot of those are not tax terms, but I think anybody with a business, if you don't know what a lot of these terms are, learn them. They're actually really important. And the last thing is, and this is really hard, I find, for a lot of business founders, don't BS that you know what is going on if you don't. It's something I was not very good at catching when I started my business, was when I had a client who's like, oh yeah, I got it great. And they did not get it, and it was not great. And they then just didn't do anything for weeks because basically they were too prideful to say, I didn't get it. Can you explain that again? Really, as with so many things in business, though, it's about building the right team of people. If you are somebody who has a lot more financial and legal education, it's less important for you to have somebody who can kind of speak in layman's terms. If you don't have those skills, find somebody who can talk to you in a language you can understand. And if you have no idea what they're saying, let them know. And if they can't fix it, go hire somebody else.
It's not worth being embarrassed over, right? You keep your mouth shut because you're embarrassed about it. You're the one who pays the price for that. So we've talked about several myths here. I want to turn it around. I've got a question for you, Matthew, that I ask all my guests, and it is this. What is the biggest secret that you wish wasn't a secret at all? What's that one thing you wish everybody watching or listening today knew?
It's not even going to be a tax thing. But I really think it's the importance of mindset in being successful in business. I know a lot of people think that's like woo-woo, mystical stuff. And I'm not a big fan of some of the, think and get rich just by thinking about it sort of stuff. But I'm a big believer that you're never going to succeed beyond where you feel you're allowed to succeed. Even if you get lucky, you'll pull yourself down. So I'm a big believer in, I call it getting rid of the poverty mindset. Don't drag yourself down. It's too hard. Business is too hard to not have, every advantage. Don't be stupidly optimistic, but be optimistic, believe in yourself. And I think that's a really important thing to succeed.
It's so true. So true. Nowhere more than I believe in the world of entrepreneurship and founders in general. Well, Matthew, there's some folks listening to this, like finally someone who speaks my language, who gets where I'm coming from. They want to know more about you and the work that you do. How can they get in touch with you?
So the best way is going to be to go to a special landing page. It's www.agorist.taxadvice.com/high demand. Agorist is AGORIST, taxadvice.com/high demand. There they'll be able to sign up to download a book of over 60 business deductions. It's some things most people are going to know about, and it's going to have some things you probably don't know about. It's just to get your mind flowing. Because my favorite question is not, can I deduct this? It's how can I deduct this? And, get your mind thinking about that. And after they download that, they'll also get an invitation to schedule a free 15-minute consult with me to see if I'm a good fit for them now, maybe in the future, see if we work out.
That's fantastic. Well, Matthew, thank you so much for being on the show. Just a privilege having you here. And for those of you watching and listening, I hope you know that your time and attention mean the world to us. I also hope you got as much out of this conversation as I know I did. You'll avoid those myths and move on to a more successful, more profitable business that you get to keep more of. And with all that, I cannot wait to see you next time. Take care.